America is broke. $38 trillion in debt. Can't even balance a budget. And right now, today, America is handing out billions of dollars to the Gulf, Saudi Arabia, the UAE, countries that don't need our charity. That's what people see in the headlines, and it makes them angry. A broke man bailing out his rich neighbor sounds wrong, except it's not what it looks like. It's a trick. And once you see this trick, you'll never look at your grocery bill the same way again. Stay tuned.
This is the Rich Dad Radio Show. The good news and bad news about money. Here's Robert Kiyosaki.
Welcome to the Rich Dad Radio Show, the good and bad about money. This is Robert Kiyosaki, and today is just you and me. Normally, when it's just us, I talk about what the rich are teaching their kids about money. This time is different. Today, we are going to explore a truth your government doesn't want to know. I'm talking about their printing money and shipping it away. Most people think money printing means a machine, a big press, churning out stacks of $100 bills. That image is wrong. It has been wrong for decades. Today, money printing is a keyboard. One person sitting at a desk, they type a number into a computer, and just like that, dollars that didn't exist 1 second ago now exist. No gold moved, no labor was performed, no value was created. A number appeared on a screen, and the world treats it as real money. That's the entire magic trick. I call it the magical money show. Some people call it quantitative easing. Some call it a swap line. Some call it a bailout. Here's the problem. It's all the same trick, wearing a different costume. Let me say this again because this is important. Same trick, different costume. Think about it. If you wrote a check with nothing in your account, you would go to jail. They do it every single day. And they give it a name that sounds intelligent, sounds responsible. Quantitative easing, swap line, bailout. That's why most people never see it coming. They're not looking for a crime, they're looking for a headline. And the headline always says the same thing. Everything is under control. It is never under control. It is just postponed. Here's where most people check out. Stay with me. The U.S. government spends about $2 trillion more than it collects every single year. That gap has to get filled somehow. So the Treasury sells IOUs. They're called bonds. 24 large banks are legally required to show up and buy them. That guarantees the auction always succeeds. The government always gets its money, at least on paper. But here's the catch. If the government keeps flooding the market with bonds and the world stops wanting them, interest rates start rising. Buyers demand more because the risk is real. And if rates climb too high, the government can't even afford the interest on its own debt. This is exactly what my rich dad warned me about decades ago. He told me the government does not create wealth, it creates debt. And it passes that debt to you through taxes, or it passes that debt to you through inflation. Those are the only two ways the bill gets paid. There is no third option. So when rates threaten to spiral, the Federal Reserve steps in. It buys the bonds nobody else wants, using dollars it creates on the spot, not earned, not taxed, not borrowed from anyone, typed into existence. In 2008, this worked. In 2020, this worked. The crisis passed, the money got repaid, the system looked clean. But watch closely, because this next part is where it stops looking clean. When we come back, a Treasury Secretary says one sentence to the U.S. Senate that gives the entire game away. And once you hear it, you'll understand exactly why they're really sending money to the Gulf. Don't go anywhere. Thank you for listening to the Rich Dad Radio Show. As you know, I've had my friend Jim Rickards on my show a bunch of times. Now, Jim has a new message to share. According to Jim, a former advisor to the CIA and the Pentagon, with close ties to the Trump administration, President Trump is about to make a move that will shock the markets and open the doors to the world's single biggest gold deposit, right here on U.S. soil. Inside this deposit is the equivalent of more than 161 million ounces of gold, which at today's prices would be worth nearly $1 trillion. And as gold continues to hit new highs this year, this deposit could make some people very, very rich. That's why Jim, a world-renowned gold expert with over 40 years as industry insider, just made a huge prediction about this Trump move and what he calls Donald Trump's secret $2 gold mine. And for all the details on this little-known $2 gold company, simply go to offair26.com to watch his presentation. That's offair26.com. I'll also put the link in the show description. This message has been paid for by Paradigm Press. Welcome back. Here's where the story gets exciting, or more accurately, disturbing. We just learned how the machine works. The Fed types money. It buys bonds nobody wants. And in 2008 and in 2020, it worked. Here's why it worked. In both of those rescues, the borrowers were the most credit-worthy economies on the planet. Canada, Japan, Britain, Europe, a small exclusive club, strong balance sheets, long track records of paying their bills. Now watch what's happening in front of our eyes. In April of 2026, U.S. Treasury Secretary Scott Bessent testified before the Senate, and he admitted something publicly. He said many of our Gulf allies had requested swap lines. The UAE, other Gulf states, Asian allies, all of them, asking Washington for emergency dollars at the same time. Because the Iran war destroyed shipping through the Hormuz corridor, and that created a dollar shortage across the entire region. People say this is generosity, an ally helping an ally. That's what they told you. But listen closely to what Bessent said next, because this is the sentence that tells you everything. You said swap lines exist to maintain order in the dollar funding markets and to prevent the disorderly sale of U.S. assets. Listen to that again. To prevent the disorderly sale of U.S. assets. You said swap lines exist to maintain order in the dollar funding markets and to prevent the disorderly sale of U.S. assets. Let me translate that. The loans are not there to help the Gulf. They are there to stop the Gulf from dumping U.S. Treasury bonds onto the open market. That's the sentence. That's the whole game, hiding inside one careful, boring sentence. Why does that matter so much? Because the selling has already started. In March of 2026, Japan sold more U.S. Treasuries than it had in 4 years. China sold aggressively. Turkey sold so many American bonds, it ran out and started liquidating its gold reserves instead. Think about that. A country would rather sell its gold than hold on to more of our debt. That says something. If Saudi Arabia, the UAE, and Kuwait joined that selling wave, the U.S. Treasury bond market could crash. Interest rates would spiral, and a government already drowning in $39 trillion of debt would not be able to afford the interest on its own bills. So Washington does the only thing it knows how to do. It creates dollars out of thin air and lends them to the Gulf, so those countries never have to sell their bonds to raise cash. The crisis gets postponed, the headlines calm down, and Washington gets to look like the generous hero, riding in to help its allies. It is not generosity, it is damage control. Now here's the real reason, and I want you to think about this. This was never about helping the Gulf. This was about making sure the Gulf never has a reason to sell our debt. That's why a broke country can still write a check to countries that don't need its charity. It's not charity, it's self-preservation. That's the answer to the question we open with today. But here's what should bother us all. The country receiving the loan keeps its lights on. The bond market avoids a visible crash. Washington gets to hold a press conference, call itself the responsible adult in the room, rescuing allies in a time of crisis. Somebody always wins in this story. That's what they told you. But somebody always loses too. Nobody tells you that part. Every dollar created out of thin air has to land somewhere. It doesn't vanish. It gets absorbed by something, by someone. Most people believe a rescue means nobody gets hurt. That's what they told you. But somebody always gets hurt. They just make sure it isn't anyone loud enough to complain. So let me ask you the question that actually matters here. Not why are they lending it? We answered that. The real question is, who actually pays the bill? When we come back, I'll show you exactly why this time is different from 2008 and 2020, and why the dollars being created right now might never come back. Because somebody pays for this, and I'm about to tell you who. Don't go anywhere.
The stock market has been downright violent recently. Stock prices swing up and down every day. Volatility is near all-time highs, and opening your brokerage account is enough to give you a panic attack. But through it all, one asset has been quietly crushing the competition: gold. Not only was gold the best performing asset for all of 2025, but according to world-famous economist Jim Rickards, a man with close connections to the White House and one of the most renowned gold experts on the planet, gold is about to go parabolic. In fact, he predicts gold will hit at least $10,000 per ounce over the next several years. And today, he's revealing one tiny $2 gold company he believes will skyrocket as the gold price marches higher, all thanks to what he's calling Donald Trump's $2 gold mine. For all the details on this little-known $2 gold company, go to offair26.com. That's offair26.com. The link will be in the show description. Paid for by Paradigm Press.
Welcome back. It's time to answer the big question. We just learned the real reason for these loans. It's not generosity, it's damage control. And I told you, somebody always pays. Here's why this time it's worse. In 2008 and in 2020, the borrowers were healthy. This time, they're not. Stressed economies, damaged infrastructure, collapsed oil revenue. A war just tore through their shipping lanes. Their income has been disrupted. Their ability to repay is nowhere near as certain as Japan or Canada in years past. If those loans don't get repaid on schedule, the dollars created to fund them don't disappear. They pile up permanently. Wall Street has a name for this game. They call it amend, extend, pretend. Amend the terms, extend the deadline, pretend the problem doesn't exist, and keep doing that for as long as the world allows it. I've seen this movie before. Same movie that played out with TARP. Same movie that played out with quantitative easing after 2008. They never call it printing money. They give it a name with initials, something that sounds technical, something that sounds responsible. TARP, QE, swap lines, different costume, same trick. Now here's what most people miss. This didn't start this year. This didn't start with a war in the Gulf. To understand how we got here, you have to go back further than this year's headlines. Here's a part that isn't okay. It's designed so you never notice it happening. Every dollar created from nothing makes every dollar you already hold worth slightly less. That loss doesn't show up as a headline. It doesn't show up as a tax bill with your name on it. It shows up quietly in the price of eggs at the grocery store, in your rent renewal, in a paycheck that buys a little less than it did last year. So who actually pays the bill? You do. I've called inflation the perfect crime for years, and this is exactly why. Nobody can trace the price of a carton of eggs back to a keyboard stroke at the Federal Reserve. There's no smoking gun. There's just a slow, steady erosion. It touches everyone, and somehow nobody gets blamed. Most people believe saving money is smart. They put money in the bank, watch the number grow, slowly, and they believe they're winning. But if the purchasing power of every dollar in that account is shrinking faster than the interest being paid, the saver isn't winning. The saver is losing silently every single day. That's why I've said it for years. Savers are losers. And strategic debtors, people who understand the game, come out ahead when the system is built to inflate away debt over time. That statement makes people uncomfortable. Good. It should. If you want to understand how we got here, you have to go back further than this year's headlines, back to 1913. That's the year the Federal Reserve was created. Same year, the income tax became permanent. Those two events happened in the same year, not by accident. The Fed needed a mechanism to back the dollars it created, and the taxpayer became that backing. Let me say that again, because this is important. You became the backing. Then in 1944, the Bretton Woods Agreement pegged the world's currencies to the dollar and the dollar to gold. As long as gold backed the dollar, the world had discipline. Then go to 1971. That's when President Nixon broke the last link between the dollar and gold. Here's what most people don't understand about that day. The dollar didn't just lose its gold backing. It stopped being money and became a currency. Think about that word, currency. It comes from the word current, like an electrical current, an ocean current. A currency has to keep moving or it dies. Money you can hold. You can save it. It keeps its value sitting still. A currency has to be spent or invested or moved into something real, or it slowly bleeds out. That's why after 1971, savers became losers and debtors became winners. Nobody explained that to the public. They just changed the rules and let everyone keep playing by the old ones. Since then, the government creates dollars whenever it faces a crisis. No physical constraint holding it back. Think about it. Everything happening with the Gulf swap lines right now in 2026 is a direct descendant of that one decision. Same playbook. New borrowers, new excuse. The trick never changed. Only the costume did. I didn't tell you this to make you feel powerless. I told you this so you can see the game clearly enough to stop playing it on their terms. A dollar sitting in a savings account is not a safe asset. It's a melting ice cube. It looks the same on the statement, but its purchasing power is disappearing while you sleep. Gold and silver have held their value across thousands of years of governments creating and destroying currencies. That's not an accident. That's the whole reason real money has been trusted for centuries. It can't be typed into a keyboard. Here's the real divide, and it's not rich versus poor. It's saver versus investor. It's the person who parks their money versus the person who moves it. Savers trust the system to protect them. Investors know the system was never built to protect them. It was built to protect itself. Most people don't realize that until it's too late. I learned this from my rich dad. He used to tell me the rich don't work for money. The rich have money work for them. What he didn't tell me back then, because the world hadn't fully shown his hand yet, was the other half of that lesson. If you don't understand how money is created, you'll spend your whole life working harder while your money quietly loses value in the background. That's the trap. Not laziness, not bad luck, a system doing exactly what it was built to do. Once you understand that swap lines and quantitative easing and bailouts are all the same trick wearing a different costume, you can't unsee it. Every headline about a rescue becomes a headline about who's about to lose value in their pocket. That's the difference between the person still asking why the government does what it does and the person who already knows. And once you know, you can't go back to not knowing. That's the difference. Thank you for your time. Thank you for caring about your future. Thank you for understanding that you are the only one who cares about taking care of you. Take care.
This podcast is a presentation of Rich Dad Media Network.